Welcome back. Well, one stock that's really been on everyone's radar has been Rajratan Wires. Remember, it's a proxy play for the tyre industry. So if we're talking about tyre players doing well, I think you should just pull up the last one-year chart of Rajratan Wires. The stock has moved from strength to strength because they make bead wires, which is an essential part which is used in tyre makers, and the cost is only around 3 to around 3.5% of the total cost of production of a tyre. To understand what's going on with the company, what's the outlook from here on, well, we are joined by the MD and CEO, Mr. Sunil Chordia, who joins as the chairman as well as MD, joins us to detail all of that. Hi, Mr. Chordia, congratulations. You know, your shareholders would be quite happy with regard to the stock price move, but we want to understand how is business panning out. So your current capacity, I think, is around 100,000 odd. You have capacity expansion that's coming on stream. That's your Thailand facility of around 20,000 tons. That's in the next month or so. For this year, what kind of a volume target that you have? And also your margins have been splendid, you know, in a very volatile commodity cycle. Operating leverage will play out. So what is the steady state margins you're looking at from here on?
Yeah, Nigel, we are in a niche product. We are in a difficult product which takes time to get approval, which takes time to learn the making right quality of product. So the growth, as I have been saying in earlier programs also, that we can continue to grow at 20% CAGR. Okay. So adding capacity won't mean that suddenly we will multiply the capacity. Okay, we have to keep the capacity ready. But yes, I am very confident of 20% CAGR growth in volume for next 4 to 5 years. And we are working on that plan.
So, and for this year, sir, what is the growth? 20% volume growth for FY23?
We did 90,000 tons last year. So, yes, we will grow by 20% in volume this year. There may be some, quarterly corrections because, there are some inventory corrections. Sometimes tire company takes a cut down in production.
Just going by what you had said in the past, Mr. Chordia, you had said that this year you will do about 115,000 tons in terms of volumes, 50,000 coming in from Thailand, 65,000 coming in from India, and a revenue target of 1,200 crores with 19 to 20% margins. Is there any change to what you've said earlier?
No, I never said 115. We said 20%, so 90,000, add 20% to it, it can be close to 110.
Okay.
Okay. Out of which around 40, 42 will come from Thailand and balance will come from India. Yeah.
All right.
Because Thailand capacity will come on stream next month. So it will be available for balance 6 months.
So what about the capacity then? Currently, you have about 100,000 tons in terms of overall capacity. By the end of this year, where does your capacity stand at? What is the breakup between India and Thailand? And the year after that, you will have your Chennai plant as well, coming on stream. So what will the capacity then be?
Yeah, so, our capacity now increasing. Thailand will become 60,000 tons, but this year we'll be able to do around 42,000 tons from our Thailand factory. We'll be able to comfortably do around 65 to 68,000 tons in our India capacity. Okay, and because India also has some black wire capacity, so I'm talking total volume from India. Thailand, Chennai will start some production by end of this financial year. So Chennai capacity will be available for next financial year. Okay. So next year we will increase some utilization in Thailand and Chennai will start. So that should add to our sales.
Yeah, Chennai is going to add another 60,000 odd. In which year does it come on stream, Chennai?
So, as I said, the project will be completed by end of March this year.
Oh.
And capacity will be available for entire next financial year.
Okay, all right. And I think the total cost was around 300 crores, right? That will all be funded via internal accruals?
No, we have also availed 100 crores of term loan, but all this 300 crores will be invested in current financial year and next financial year.
All right, we take that point. So basically, ramping up of capacity, etc., should play out from next year onwards, where you will have a total of almost 180,000 tons in terms of overall capacity, 120 in India and 60 in Thailand itself. But You had also, mentioned that you are evaluating a manufacture of steel cords for tire makers. Is there an update on that? And is there any plan of diversifying into any other business vertical in the auto industry?
No, there is no plan to diversify. We are a focused company and we want to remain focused. Yes, steel cord is a product which also goes into tires, but technology is very difficult, and right now we are not able to find any technology partner. Okay, so no comments on that.
Okay, all right. Mr. Chordia, you've been gaining market share. I recall when you were the market leader with the early 40%, that went to the late 40%. I think you're at 50% odd. A couple of, competitors in the market, Aarti Industries, if I'm not mistaken, the Aarti Group, Aradhya Group, a couple of them have had their own financial problems out there. So what is your updated market share? If you could give us a sense on that front. And a couple of these units, they were struggling. If they're put on the block, are you interested?
No, there is nothing on the block. There was one company which went into NCLT and it has been taken over by one of the companies, and they are starting to, starting production there. But we don't have any plan, and there is no more available in the market. And anyway, we would not like to buy any capacity. Okay, we will like to do our own projects, because we have done a lot of innovations, a lot of improvement in our technology, and we would like to grow with that technology.
And what about your updated market share?
Market share remains close to 50%.
Okay. And could you give us a sense of the way the market is poised right now? Back in the day, you did say that, while imports are about, the price difference between imports and domestic manufacturers is just about 5 to 10%. It is the logistics which make imports difficult. What is the share of the market right now domestically catered, and how much of that is imported? Can you give us a sense now?
Up to last quarter, around 15% was coming from, import, because logistic costs are also now coming down, but which is good for all the businesses. We are looking at exporting more from India. So our plan is to export at least 50% production from our Chennai factory. Chennai being a port location, we also think that India will remain competitive in raw material price. Rajratan will remain competitive in production price, and we are now working very hard, very seriously to explore market in Europe and more market share in Southeast Asia.
Okay. All right. Final question, Mr. Chordia. For you, your margins are very important, because there's a conversion that you're doing out there. Could you tell us, in terms of EBITDA per ton or on a margin parameter, what can you hold out? I'm looking at your last quarter. You did close to around 21% of margins. What should be the margin outlook from here on?
It can be plus minus 2%, okay, which is okay. It can go down to 18, 19, it can go to 21. But I think we have done a lot of work in our internal working, in our production systems, okay. So majority of this improved margin comes because of our improvement in cost, okay. So we are sure of maintaining a good margin going down the line.
All right. And final one before we let you go, a quick one. EV, we understand the tires require an upgrade in the quality of the beads. Just wanted to understand, will you be able to meet that demand? Any additional capex required to meet the EV tire demand? And, have you...
We are already suppliers to all the tires, including EV tires. Yes, companies are launching new tires for electric vehicles, but our wire goes well with those tires also.
And any new customer that you've added in the last couple of quarters?
I have been talking about Michelin.
Yes.
Michelin is a very important customer in terms of quality, because getting approval from Michelin is a feather in the cap. Of course, the volumes are not very big, but it talks about the quality of product we make.
Mr. Chordia, when does Michelin look at it? When is the review?
We got the approval and we have started supplying bulk volume to them.
Okay.